be studying cash flow statement. What is a cash flow statement? A cash flow statement is a statement which shows, it is a statement, okay? It is a statement which shows flow. Flow means inflow and outflow of cash. It shows inflow and outflow of cash. That is your cash flow statement. Okay. Guys, inflow and outflow, that is where the cash is coming in and from where it is going out, the inflow and outflow of cash, but we record in nothing but our cash account. We prepare something called as cash account, and there we record our inflows and outflows of cash. So how cash account? We start with opening balance, then we record all the receipts, then we record all the payments, and then we record the closing balance. Correct, right? This cash account, now prepared in a statement form, is a cash flow statement. Okay. The next question is, why should I prepare a cash flow statement? Okay, so the thing is very simple here. The logic behind having a cash flow statement is very simple. It says that in a company, highly liquid investment. Highly liquid investment. The investment means that something you can quickly convert into cash. Okay, highly short term maturity, that is less than 3 months, and has very low risk or very insignificant risk, low or insignificant risk, then it turns to be a cash equivalent, and these two should put together to arrive at cash and cash equivalent. Okay, so opening balance of cash and cash equivalent plus receipt minus any payment will give you your closing balance of cash and cash equivalent. Okay, now this statement I'm going to rephrase. Okay, I'm going to rephrase. I'm going to say receipt minus payment plus opening balance will give you closing balance. I have just, rephrased it. That's it. Okay. Now further rephrasing, receipt and payment will be named as inflow of cash minus outflow of cash plus the opening balance will give you closing balance. Okay, inflow minus outflow. Receipt is inflow, payment is outflow, opening balance, and that will give you the closing balance. Okay. In a cash flow statement, this inflow and outflow should be shown in under three different subheadings. All inflows and outflows in the cash should be distributed between three different subheadings, which are operating cash flow, investing cash flow, and financing cash flow. This inflow minus outflow should be this entire all inflows and outflows should be put into these three subheadings. Okay, so they should be distributed. So each item will either come in operating or investing or financing. Okay, so these three should be further put into these subheadings that are operating cash flow, investing cash flow, and financing cash flow. Now we have to understand first, before I teach you, how it should be presented. First, I want to teach you what is operating, what is investing, and what is financing. Okay, now pay attention. Very, very, very easy. Okay. First, what will happen? First, we'll start the business. First, we will start the business. When we start the business, we need capital. Okay, capital, and we need money. That's what capital and money. How do we get this capital? We either have issue equity shares or preference shares, or we take a loan, we issue debentures. So these are all capital and borrowings. Basically, what we do when we want to start the business. Once we have the money, what are we going to do? We are going to do the business. That is nothing but we are going to purchase goods, incur some expenditure. Then these goods we are going to sell, earn some income, and thereafter we will earn profit. Correct? Once we earn profit, what are we going to do? We are going to either repay our loans and debentures. After the debenture, we have more profit. What are we going to do? We are going to invest. Invest into buying some land, or buying shares of another company, or buying debentures of other company, or buying government bonds, or anything, any kind of investment we are going to make. Correct? Guys, these three things that you're going to do are your activities. Anything which relates to capital borrowings or liability side of balance sheet long term, then it is called as financing activity. Okay, anything which relates to operations of the business, that is purchase, sale, income, earning, expenses, earning profit, all those are operating activities. Okay, and anything which relates to your investments are your investing activities. Simple. Okay, like for example, if I issue debentures, guys, if I issue debentures, money will come in inflow. If I issue debentures, money will come in inflow of cash. On those debentures, I have to pay interest, outflow. So both issue of debentures is an inflow of cash. Now this inflow, I need to either put it in operating, investing, or financing. Now since debenture relates to capital or money borrowing, then it comes under financing activity. Okay. On those debentures, I'm paying interest. So that interest for me is an outflow, right? So you will minus the outflow. Okay. And since this interest belongs to the debenture and that debenture is a part of finance, then it will come under financing activity. Clear till here? Okay. Now let's say we paid salary. We paid salary. So salary is what? Salary is a operating activity. Like because of the operations of the business, we have to pay salary. Correct. So that operate salary is a outflow. So in operating salary. Okay. Let's say on our shares, we got dividend. So that dividend will become a investing activity and it is a inflow. So you will add. Am I clear till here? So is this should be clear that anything which relates to capital or borrowing or long-term liabilities side of the balance sheet, then it becomes a financing activity. Asset side, long-term asset side of the balance sheet, it becomes an investing activity. And any P&L item becomes a operating activity. Am I clear till here? So in our cash flow statement, this is how we present. This is how we present. We start with we start with operating cash flow. We do inflow minus, okay. Then we do investing cash flow. We do inflow minus outflow. Then we do financing cash flow. We do inflow minus outflow. Then whatever we get, that will be called as cash flow from activities. From all the activities, this is the cash flow that we have earned. Then to this, we should add our opening balance and then we will arrive at closing balance of cash and cash equivalent. This exactly is how our cash flow statement should look like. Okay, I have a pro forma format for you. We always present it like this. Okay, we always start with in the books of cash flow statement for the year ended, whichever year. Okay, this no, sorry, this will not come. It depends from question to question, right? We start with cash flow from operating activities. All inflows minus all outflows we will write here. Outer column amount will come here, which says net cash flow generated from operating activities. But if it is a negative amount, then we write net cash flow used in operating activity. Same way with investing activity and same way with financing activity. Once you get these three figures, you will add or minus these three figures and you get this figure, which is called as net cash flow generated from activities. Same way, if it is negative, then we write net cash flow used in activities. You add opening cash and cash equivalent and you arrive at closing cash and cash equivalent. Okay. Now we will go in depth and understand how to exactly calculate cash flow from all of these activities. Okay. Now we go in a little depth and understand how to calculate all of these activities say cash flow. Okay. So we go to understanding cash flow from operating activity. Okay. So cash flow from operating activities is nothing but from your operations. Operation means business activities. What are the cash flows that you have generated? Okay. So business operations mein what are the cash flows that we will generate? See, first we will talk about inflow. Inflow means money should come in. So in our operations, what money will come in? What money will come in? One, we will have cash sales. Okay. Then we will have credit sales. But guys, you should understand, in case of credit sales, the money will not come now. If you do credit sales, the money will come later. Okay, after some time. And that is called as collection from debtors. So in a cash flow, if you make cash sales, it is not, sorry, if you make credit sales, it is not going to be bothered. It is not going to come here because there is no flow of money. Collection from debtor will come. So we write here collection from debtors. Okay. Then after that, you may have other income. Just say, for example, in my operating business activity, let's say we earn some commission by doing any kind of sale. Okay. So that also is a operating activity and we write here. So we add operating cash income. Okay. The same way we minus cash purchases. Then you will minus collection from debtors. Sorry, collection, sorry, Chhi, sorry, payment to creditors. Okay, and you will minus any operating cash expense. Okay, operating cash expense, like for example, salary, rent, electricity. So, all these are very much necessary for us to do our day to day business activities, right? So, that is why these are called as operating cash expenses. Okay, now I'll give you one example. Pay 100% attention right now. Let's say there is an expense called salary to employees. Okay, that salary you have paid to your employees. Why? For the business operations? Then yes, but salary to employees will come here. You have to minus it. Salary paid, not outstanding, not payable. Salary paid will come here. Okay. Let's say you have another expense called as interest on debenture. Okay. Now that debenture interest, why are you paying? Because you took a loan, you issued debentures. On those debentures, you are paying interest. Correct. Now, mind you, that issue of debenture is a financing activity. And on that, interest will also become a financing activity. Okay. So therefore, debenture interest will never come here. That's why I've written it very carefully that this is operating cash expense, operating cash income. You can never write any, investing activity, invest income. Just say if you have interest on your debentures that you hold of other companies, or interest on government bonds, or dividend received from another company, that will not come here. That will directly go to investing activity. Am I clear till here? Okay. Thereafter, you should minus one more item called as payment. That is very, very, very important. It is not payable, proposed, or anything. What is provision is also not there. What is written? Payment of income tax. How much income tax you paid in the current year, that will come here. After this, you get something. From this, you minus adjustment of, add or minus, depends, adjustment of abnormal items. Abnormal items, like in sense, in your business there was a fire. Okay, in your business there was a fire, and the entire stock was burnt. Okay, this is a abnormal item. This is an abnormal event. Now, because of this, you will get insurance claim. That insurance claim is the abnormal item. Okay. Now, since it is relating to stock, and stock is in relation to your operation activities, therefore that item will come here. And then whatever you get will be called as net cash flow generated from operating activities. So these are your inflows, and these are your outflows. So inflows minus the outflows will give you your net cash flow generated from operating activity. Now, similarly, let's say there was a fire in your business and your machinery was burnt. So the insurance company gave you money for the machinery. That machinery is an asset. It belongs to investing activity. So if you get money for that, it will not come here, it will come under investing activity. Okay. So you have to be very careful what is it in relation to. If it is in relation to stock, then operating. But if it is in relation to other assets, then it will come to investing activity. Am I clear till here? So this way of arriving at operating activity is called as direct method. Is called as direct method. Okay. But let's say in the question, they never gave you cash sales. They didn't tell you what is collection from debtors. They didn't give you any expense. They didn't give you anything. They didn't give you anything, any of these things directly. Then what you're going to do? Then you're going to do indirect method. Then you're going to adopt indirect method. Okay. They didn't give you cash sales, collection from debtors. They didn't give you all of this directly. But what they did, they gave you trading and profit and loss account in the question. So how do we prepare our trading and profit and loss account? How do we prepare our trading and profit and loss account? We start with opening stock, correct? Then we write purchases that will include both cash and credit, total purchases, correct? Then we have direct expenses. Then we have sales, which will include again cash and credit. Then we have closing stock. GP will be balancing figure, which you have indirect incomes, indirect expenses, and then whatever you calculate will be called as net profit. Okay. Now, can I say, or can we assume that this net profit is the cash flow generated from operation activity? Can we assume that this net profit, which is given to us directly in the question, can we assume that this is a cash flow generated from operating activities? No, no. Why? Because one. In this indirect income, indirect expenses, here, in all of these, we include cash item and non-cash item. Just say, for example, in P&L, we do record depreciation, right? And depreciation is a non-cash item. Okay. Second, in trading and P&L, we not only record operating activities item, we also record investing and financing activities in items. Just say, for example, if you've taken a loan, interest on that loan will definitely come here. Correct? So if it is coming here, then we are recording all three activities. Wherein to find cash flow from operating activities, I need only operating activities items. Correct? Then what do? We follow indirect method approach, okay? Which is also very, very easy. Now pay attention. How do we do it? What do? We start with net profit. We start with net profit. This should obviously be before tax. Okay, because we are going to minus tax we start with. Let's say if they have given you net profit and they have given you trading P&L directly, they have given you net profit, great, take it from trading P&L. But if they have not given you, then you can go to your balance sheet under reserves and surplus. You will have P&L, right? So the difference of opening and closing will give you your net profit. Okay. Now, talking about expenses, these expenses will include all non-cash items also and non-operating items also. Correct? So, income minus expense will give you net profit. That expenses already minus, right? Which we did not have to minus. So, now add it back. So, you add back non-cash and non-operating expense. Similarly, we minus non-cash and non-operating incomes. Okay, I'll give you some examples of these non-cash items. Okay, non-cash items, जैसे depreciation, provision for tax, goodwill written off, loss on sale of asset and investment. We should go to investing activities. Discount on issue of debenture, financing activity. Interest expense, financing activity. Profit on sale of fixed asset or investment, any interest income. So these are all your investing activities. So these should go to those respective, any non-cash and non-operating items we should adjust back. Okay. Thereafter, you should add or minus any change in current asset or current liability. Any change in current asset or current liability should come here. That is, if there is a decrease in current asset, it should come here. If there is an increase in current asset, then you should minus. Increase in current liability minus. See, the logic is also very, very simple here. See, here opening stock and closing stock are there, which is your current item. Purchase may credit, which is your creditors. Sale may credit, which is your debtors, right? So all these current items, that is current assets and current liabilities, any change in them should also be recorded here. Okay. And lastly, how we did here, we should also do minus payment of tax. Okay. Will be called as net cash flow generated from operating activities. Okay, so this is how we do. You have to look for hints in the question if they have given you direct method or indirect method. Sales or credit sales, and if they have not given you, or you should look if they have given you net profit. Okay, and then depending upon either you should choose direct method or you should choose indirect method. Okay. Next, we go to how to understand cash flow from investing activity. Guys, this is so very easy. Investing activity, matlab, it will relate to long-term assets. A furniture, or if you're purchasing a machinery, then it is a long-term asset. Then purchase means it is an outflow of money. So you should minus. If you're selling a asset, if you're selling a machinery, that will be an inflow of money and you should add. Okay. So inflow, add, outflow, minus. So whenever you purchase, it is a outflow. So minus. Whenever you sell, it is the inflow, you should add. So guys, this is very, very simple. Any item relating to investing activity, just say for example, if you have shares of some other company and on that you received interest, then it is definitely a investing activity and it should come here. Okay. Now pay attention here. Places you might get stuck. Two places very important where you might get stuck. Pay attention. First. If there is any sale of asset, they told book value of asset 500, sold at profit of 100. Okay. So here, what amount are you going to write? You are selling, so you have to add. Now the question is, what amount are you going to add? Now that's very important. See, here we are talking about cash flow statement. How much cash has flown when you sell an asset? How much money has come in? Book value? No. Profit? No. The money that comes in is always the selling price. The money that comes in is always and always, always the selling price. So here when you write sale of asset, you should always write. Okay. Now, sometimes to these assets, there might be TDS or there might be capital gains involved. So those also needs to be shown appropriately. You have to show a separate disclosure and show it here only under investing activities. Okay. Chalo. Then we will be able to generate cash flow from investing activities, which will come here. And if it is negative, then we show cash flow used in investing activity. Okay. Last one, cash flow from financing activity. This is the even more easier. Financing activity talks about debenture, loan, your preference share, your equity shares, anything related to them. Whether you are issuing debenture, redeeming debenture, issue preference share, redeem preference share, taking loan, repaying loan, issue equity share, buy back the equity share, or pay interest or dividend to any of them. Anything related to those, those items, these four items will always come here. If you issue debenture, then there is an inflow of money, add. You redeem the debenture, outflow of money, minus. On those debentures, you are paying interest. So therefore, it is a outflow, minus. Preferential issue, inflow, add. Redemption, minus. Preferential, preferential dividend, minus. So same way, you do all inflows minus all outflows, you will get cash flow from financing activity. You add all the three, add the opening and arrive at the closing. Okay, we'll quickly do one or two questions to understand cash flow statement. Okay, now prepare cash flow from investing activities. So guys, here the question is telling that we have to do only and only investing activity part of the cash flow statement. Okay, for Mrs. Creative Furnishings Limited. So that means we don't have to do full-fledgedly, only investing activity part of it. Okay. Plant acquired by issue of 8% debenture. So we are issuing debenture and acquiring a machinery. Issuing debenture, acquiring machinery. Now think and tell me, in this, is there any cash flow involved? There is no flow of cash. Machinery is coming in, debentures are going out. There is no cash involved. Therefore, this will never come in cash flow statement. Okay. Claim received for loss of plant in fire. So you have lost a machinery in fire, and for that you have received an insurance claim. So then that definitely will come in investing activity. You have to do same adjustment of extraordinary item. How you did same in operating activities, the same way you have to do in investing activities also. Okay, so yes, this will come as abnormal item. Unsecured loan given to subsidiary. We are giving a loan to our subsidiary company. So our subsidiary company is obviously our investment, right? So yes, this will come. Now, since you're giving a loan, it is an outflow. So therefore, you should activity. Pre-acquisition dividend received on investment made. Again, on our investment, we are receiving a dividend. So investment is always obviously a investing activity. Therefore, you should add. Debenture, guys, debenture is a financing activity. So this should go to financing activity. It will never come investing activity. Term loan repaid. So loan, if you're repaying, again, loan is also a financing activity. So it will never come here. It should go to financing activity part. Investment. So we made an investment. On that, we are receiving interest. So investment is all obviously an investing activity. Therefore, yes, definitely it will come. But what are they saying? A TDS of 8,200 was deducted on the above interest. So on this deducted a TDS of 8,200. So that means first I need to show the gross figure. So the 868 plus 8 will be uh, 70, 74, 76, 76, 200. So first I need to show the gross minus the TDS. Okay, and last one. So yes, this will definitely come, and this is the interest received. So this is a add. Okay, and last one, book value of plant sold. Guys, again, this is a book value. We don't need book value. We need the selling price. Okay, 1,000 is a book value, and we incurred a loss of 9,600. So then, whatever we arrive at, that will be the selling price, which there will be an inflow of money that you should add. Okay, so your answer should somewhat look like this. Interest on investment, entire 76,200. Then we are showing TDS on the above separately. Okay. Okay. And here we record sell value of the plant. This is how your answer should look. Okay. One more question. One more question. Last question. Okay. Prepare cash flow statement for Gamma Limited for the year ended 31st March. Sales. Guys, they have just written the word sales. Okay. So mind you, always remember this. You can never go wrong. Like this is bare minimum basics. Question remaining silent. Sale is always credit sales. If in the first in the question they've not told whether this is cash sales or credit sales, then it means that this is cash sales. Sorry, this is credit sales. This is credit sales always. Same goes for purchases also. If question is silent, then this means that this is credit purchases. Okay? 135 crores, out of which 60% was cash sales. That means balance 40% will become credit sales. Okay. Purchases for the year amounted to 55 crores. Purchases were 80%. That means balance 20% will be cash purchases. Okay. So can I say these two will go to operating activity? Okay, sale and purchase. Administrative and selling salary paid amount to 22 crores. Again, this is operating activity. Okay. The company redeemed debentures. So debentures means this will become financing activity. Okay. The company redeemed debentures. Matlab if you are redeeming, then can I say it is 22 crores? Debenture holders were issued equity shares of 15 crores towards the redemption and cash. That means out of 22 crores that was payable to the debenture holders, 15 crores was paid in form of equity shares and balance 7 crores was paid in cash. Okay, so now you can tell me in cash how much should appear in cash flow statement. Only 7 crores cash paid will come. Okay, because here we are going to talk only and only about cash flow, how much inflow or outflow is happening. Okay, debenture interest. So guys, this is debenture interest we are paying. So this is a financing activity. Paid was 1.5 crores. Okay. Dividend paid during the year amounting to rupees 11.7 crores. Guys, we are paying dividend. Whom will we pay dividend to? Our equity and preference shareholders, right? So again, they are our financing activity. Investment costing rupees 12 crores were sold at a profit of 2.4 crores. Guys, investment. We have made an investment. So this is investing activity. That is cost price. And they have told there is a profit of 2.4 crores. So can I say selling price will be 14.4 crores. Okay. So in our investing activity, we will record 14.4 crores inflow. If you are selling that rupees 8 crores was paid towards income tax during the year. Guys, we are paying towards income tax. So that should go to operating activity. A new plant matlab plant and machinery. So this is our investing activity. A new plant costing 21 crores was purchased Okay, so 21 crores worth plant and machinery is purchased in part exchange of old plant. Matlab, towards the new plant, we have to do two things. One, we have to give our old plant and machinery for some part, and for the other part, we have to pay cash. The book value of the old plant and machinery was 12 crores, but the vendor took over the plant only at 10 crores. So they took over the old plant and machinery only at 10 crores to be paid vendor in cash. So we have paid how much? 11 crores in cash, which should go to investing activities. Okay. Then they have given debtors opening and closing, creditors opening and closing. Now, guys, very important. Why have they given you debtors and creditors opening and closing? See here, I told you in the operating activities, either you have to do direct method or you have to do indirect method. Correct? Now, in this question, you know what are the cash sales. See, they have given you here. You know that the cash sales are, sorry, cash sales are 60%, cash purchases are 20%, right? So you know what is cash sales, but they have not given you collection. They have given you credit sales. Now you have opening balance of debtors, closing balance of debtors, and they have given you credit sales. From that, you have to find collection from debtors and payment to creditors. Okay, so how do we find that? How do we find that? We quickly open a small debtors account. Opening balance is 45, closing balance is 15. Then we have credit sales. We have made credit sales worth 135 into 40%. Into 40%. Whatever you get, you write here. And then whatever you get here, this will be collection from debtors, which you will record in this part. In this part. Here you will record. Okay. Same way cash purchases is given. Payment to creditors, you will open small creditors account and record. And operating cash expenses are directly given to you here. Administrative and selling expenses. And thereafter, we prepare our cash flow statement. This will be opening balance of cash flow. This will be a closing balance of cash flow. So this is how your answer should appear. This is how your answer should appear. Okay. We start with cash sales, collection from debtors. Okay. Cash purchases, payment to creditors, admin expense, salary expense, income tax paid. Then this is sale of investment, and this is the purchase of plant and machinery. Redemption of debenture, interest and dividend, and thereafter. So guys, see, if you can see, the answer I have got is 18.2. Okay, so is this 18.2 is nothing but cash flow plus opening. So if I do 12.2 plus 6, I will get 18.2, which is also the closing balance which is given to us in the question. So the best part about cash flow statement, when you have to prepare a full-fledged cash flow statement, in the exam only you will know whether your answer is correct or not. Okay, because closing balance, what you arrive and what should be in the question, it should be the same. Right? So this is how we prepare cash flow statement. I hope you enjoyed watching this video as much as I enjoyed teaching it. See you soon. Have a great day, guys. Bye.